This morning, the U.S. Labor Department has released unemployment numbers for September. So joining us to break down what it means, we have Roddy from Rockland Trust. Thank you so much for being with us.
Good morning. Thanks for having me.
So 134,000 jobs added last month. That's the fewest in a year. Still, the unemployment rate actually fell to 3.7%, which is the lowest since 1969. What do you make of this?
I think that 3.7% is getting more attention right now based on how interest rates are spiking up this morning, which, that's probably getting the most attention. The $134,000 number, 34,000 job number was light, but I think you can look past it. I think there's some storm influence there with Florence and the Carolinas. Last year, remember, we actually had a negative number that got revised up, and most September numbers do get revised up.
Okay.
And we had some major revisions in August and July up. So I think we can kind of look past this, and the market seems to be looking past the light job number and looking more towards the unemployment rate.
Okay, and so you mentioned also the interest rates, and that's really impacting the housing market as well, including here in Massachusetts and around New England.
Yeah, it is. I mean, right now, for the first time in a while, we're seeing, some interest rates on 30-year mortgages approaching and being at 5%. A year ago, that was 1% lower, and 2 years ago, that was 1.5% or so lower. That impacts everyone's monthly payment, and the more you put into the monthly payment, you have to think about price, and we have seen housing sales be a little bit slow lately as buyers and sellers are trying to figure out where that price point is.
And we were talking about this, so one thing that you've picked up on is that the price point is kind of changing in terms of what buyers think is attractive. So maybe some of the neighborhoods where prices are a little lower, maybe that's an opportunity for sellers.
Yeah, I think that's actually selling a little bit more quickly. The higher end homes are taking a little bit longer to go off the market, where the lower end homes seem to be turning over a little bit more quickly. I think buyers can be patient here, although as rates go higher, maybe their cost goes higher, but really the sellers haven't given in enough on price, I would say, at this point.
Anything else that jumps out to you?
Well, the interest rate, move today is going to, probably encourage the Fed to raise rates again in December, and there are going to be probably a few more next year. So, that's going to start to be a factor. I also noticed that, our trade imbalance was a little bit higher, which I think is somewhat, you're starting to see small signs of some of the tariff in those numbers too.
Yeah, and then you're mentioning the trade imbalance and the tariffs. So one thing that I'm not the expert like you are. One thing that investors seem to be talking about is just kind of the shift in terms of where they're putting their money, staying away from large cap corporations.
Great question. Yeah, the large cap stocks domestically here have done extremely well. The rest of the globe is not. I do think that it's a great time to be rebalancing away to some of those areas that look cheaper, even looking into bonds. I mean, bonds are paying you almost double what they were paying you a couple of years ago.
Okay.
So that's a good area to be rebalancing to.
Thank you so much for joining us this morning, Roddy from Rockland Trust. Jeff, back to you.